Who do we ask about this? Well, let's bring in the guy who runs about $88 billion in equities at Eaton, Vance. He's Eddie Perkin, Chief Equity Investment Officer at the firm. Eddie, what's going on here? That's an unusual bit of behavior, isn't it?
It is very unusual. We're seeing a lot of cross-currents across markets, and equities, U.S. equities, seem to be taking Brexit in stride, but other markets are telling us something else, I think.
Okay, so what do we do? The Dow is now at session highs, but we've got two-year highs in gold, and we've got Treasury yields earlier dropping to an all-time record. So tell me right now, what do you do knowing that this weird behavior may have stemmed from the British exit from the European Union that may have a longer tail?
Yeah, I think you have to accept the possibility that this is going to have an impact, certainly on the UK economy, the European economy, and potentially the global economy. So we're always defensively minded at Eaton, Vance. We want to protect the downside. I think now is as good a time as any to stay defensive and to look for quality companies with good, strong balance sheets, and that's how we're always positioned, but particularly so now.
Okay, but quality companies, but who do or do not have exposure to the European Union or Britain?
I think less is better. More domestic, U.S.-facing companies, I think, are going to be the relative winners here. I think the trick is defensive stocks like utilities, consumer staples, telecoms have all performed very well this year. They tend to have good dividend yields, so they've been bid up to very expensive valuations. So you really have to look for inexpensive defensives, which are hard to come by. The one place we're finding that is in the healthcare sector. And then for your cyclical exposure, if you don't want to take too much risk, stay with the more quality-oriented cyclical companies. We're finding those in the industrial sector.
So you're picking Eli Lilly as your healthcare play. Kroger is a nice place, certainly, if you're looking at perhaps consumer durable, companies that people actually need to reach out for. But Eddie, as we just have about a minute left, tell us exactly what you think happens for the next couple of weeks when volume tends to go down, it becomes very, very light.
Yes, it does, and of course we've got the earnings season coming up. We'll start to hear from companies how their second quarter earnings were, and they'll give us outlook statements for the second half of the year. One thing I fear is that companies will use Brexit and volatility in the market as an excuse to lower guidance for the second half of the year. They'll blame it on the macro uncertainty rather than on what's happening in their own businesses. So we could see a fairly muted earnings season.
I think you're right here, but we're not seeing anything muted about today. We are closing near session highs, folks, with the Dow gaining 77 points. Watch out for that fear trade. It's in play, too. We hand it over to Melissa and David for